My name is Fatia Hana with Muhammad Sasulisab. So the purpose of this study is to apply the income tax at 96 level in a real-life context. Instead of just learning theory, we wanted to understand how taxable income deduction and relief are calculated, while also appreciating the importance of financial management and also critical thinking. In terms of scope, our assignment goes beyond simple tax computation. We first collected personal and financial data such as income, dependence, asset, liabilities, and also donation. And then we prepared a structured assessment from gross income to final taxability, applying the 2024 release schedule. We also explore potential tax planning opportunities like optimizer release and charitable contributions. Looking at the taxpayer profile, Puan Aida is 89,400 per year for her teaching profession, bonuses and dividends. Her husband, Encik Karisha, is a retired with a pension income of 24,000. Together, they are raising 3 children who are still studying, with the youngest recognized as a person with disability. Puan Aida also holds some assets such as gold and savings, but has liability like loans and credit card debt. Importantly, she contributes to zakat and charitable donation, which play a role in her tax assessment. The significance of this case study is that it gives us a realistic foundation for understanding taxation. It shows how family responsibilities, income sources, and liability all interact in determining tax obligation. More broadly, it highlights the role of taxation not only in personal financial planning but also in contributing to the nation's development.
Hi, my name is Adelina Wafa and my matrix number is 2024757485, and now I would like to explain on the methodology part. So for this study, our group collected data from Puan Aida binti Abdul Majid, who is the mother of one of our members. So we used the personal profile template and interviewed her directly to ensure accuracy. We gathered both personal and financial details, including her salary, bonuses, dividend income, saving, liabilities, and also charitable contributions such as zakat and donation. We also recorded her family background, including her retired husband and 3 children, with the youngest having a disability. Based on this information, we carry out her income tax assessment under the Malaysian Income Tax Act 1967. Her total annual income was 89,400 ringgit Malaysia. We then apply allowable deduction and relief from the 2024 schedule, considering her married status, dependents, and donations. From there, we calculated her chargeable income and tax payable using the progressive tax rates. In addition, we suggested tax planning strategies such as maximizing relief for education and lifestyle expenses, and also managing charitable contribution for both social and tax benefits. Overall, this case gave us hands-on experience in applying tax law to a real individual. It's not only improved our technical understanding but also highlighted the importance of proper financial training and compliance in everyday life. Thank you.
Hi everyone, my name is Hazifa binti Hamza, so I will continue present on income tax assessment for this case. The tax computation show how an individual's final income tax liability is determined. So first is the taxpayer's main source of income is employment, with an annual salary of Rm 86,400 and a bonus of Rm 1,000. So making the total employment income is Rm 87,400. So on top of that, the taxpayer also receive a dividend of Rm 2,000, so giving an aggregate income of Rm 89,400. So from this, we deduct a donation of Rm 1,440 made to Pertis, so which is the Malaysian Association for the Blind. Since Pertis is an approved charitable organisation under the Income Tax Act, so donation to it are tax deductible. So after this deduction, the aggregate total income is reduced to Rm 87,960. So next, we apply personal tax relief. This include individual relief of 9,000, spouse relief of 4,000, children relief amounting to 12,000 with 2,000 each for the first and second child, and 8,000 for the third child who has a disability, and a lifestyle relief of 1,000. So altogether, the total tax relief is 26,000, which bring the chargeable income down to Rm 61,960. The progressive tax rate are then applied. So the first 50,000 is taxed at Rm 1,500, and the remaining is Rm 11,560. is taxed as 11%, which comes to Rm 1,315 and 60 cents. So the total income tax before rebates is Rm 2,850 and 60. Lastly, the taxpayer has paid zakat of Rm 2,400, which qualify as a tax rebate. After deducting this, the final tax payable is only Rm 415 and 60. In conclusion, this case clearly show how donation to approved institution like purchase along with debt release and zakat rebate help reduce the tax burden on individual and support family, especially those with dependents and disabled children. Thank you.
Thank you for Hazifah. For the recommendation part, there are several ways Puan Aida can optimize her tax planning. First, Puan Aida should maximize the education relief. Since all 3 children are in higher education, she can claim up to 8,000 per child. This is not only reduce her chargeable income but also supports the cost of tuition and professional study. Second, the family can benefit more from disability tax relief. The youngest son is registered as disabled, which already gives 8,000 relief. On top of that, any medical expenses, equipment or therapies can also be claimed by keeping receipts and proper records. Puan Aida can make sure the maximum relief is received. Third, Puan Aida can look into retirement saving through voluntary contribution to topping up EPF. This gives her to 3,000 relief each year. It is useful because her husband has already retired, so planning ahead for financial security is very important. Next, Puan Aida can claim medical and lifestyle relief. This includes expenses such as books, computers, internet, sport, which can be claimed to up to 2,500 to 3,000. Medical expenses for parents for health checkup can be claimed up to 8,000. Lastly, for the recommendation, there is zakat optimization. Since she already paid zakat of 2,400, this amount is deducted directly from her tax payable. If her zakat payment is more than Puan Aida actual tax liability, Puan Aida does not need to pay any extra tax. For example, if her tax is 1,400 but zakat is 2,400, then she has no tax balance to settle. So I will pass to Aiman.
Hi, my name is Wan Ahmad Iman bin Wan Muhammad Sanusi. My matric number 2024-786-240. From the reflection, I've learned 2 key lessons about tax relief. First, awareness of eligibility is crucial. Many people miss out simply because they don't know their entitlements or fail to keep receipts. This shows the need for better tax literacy and proper record keeping. Second, early planning matters. By tracking expenses and receipts throughout the year, taxpayers can avoid last-minute stress and make smarter financial decisions that align with available reliefs. Next, looking at the challenges faced in tax planning, there are 2 main issues that stand out. First, for Muslim taxpayers, balancing zakat and tax planning is not easy. It requires accurate income forecasting, and mistakes can cause either cash flow strain or unexpected tax bills. Second, a lack of awareness and poor record keeping often prevent people from claiming the relief they deserve. Missing receipts or limited knowledge can also result in higher tax liabilities or even penalties. Last, from the reflection, I have gained several important insights. First, continuous updates are vital. Since relief categories change over time, taxpayers must stay informed to maximize their benefits and remain compliant. Last, the documentation is key. Without proper receipts or records, even valid claims can be rejected, which is why digital record keeping is so helpful. That's all from us. Thank you for listening.